Hey, everyone, welcome to the VIP morning prep every morning at 9 a.m. Eastern. You can listen to it live if you're a VIP. You can head over to StoryTrading.com to do that. Wow, a lot to talk about. First thing I want to touch on before we get into the levels of support for QQQ and NASDAQ is why we're doing this, right? We talk about the four pillars at StoryTrading, catalysts, fundamentals, technicals, and sentiment. And lately, we've been talking about macro a lot, which we haven't in the last couple years. It's never been part of our shtick. We don't really worry about what the indices do or what the mega caps do. It never really seemed to have an impact on our particular micro caps. But now we are in a time period where it is important. And you can see that mechanically, right? You can see micro caps, undervalued stocks, whatever asset class it is reacting to the stock market. And I'm going to tell you today that falls under the sentiment category, right? Traditionally, when we look at sentiment, we're talking about things like faith in management and their ability to execute. We're talking about product market fit. We're talking about moat. Sentiment is those qualitative aspects of fundamentals which cannot be seen on a spreadsheet, not seen on financial models. And that's what sentiment is. Now, the macroeconomy is part of sentiment, but the macro has been stable the last several years. So we never really had to consider it when we're analyzing stocks. Now we're in a situation where the macroeconomy is not stable, and that's not only impacting the indices, but the rest of our stocks. And what I want to make clear to everyone here is that when a microcap stock goes down, and SMSI is a great example. Well, yesterday there were earnings, but forget about yesterday. But in general, when you see a correlation between SMSI and say ARK or QQQ, that's not a random correlation, or that's not, put another way, that's not a correlation that is unwarranted or that's just noise. There's a fundamental reason behind that correlation, and that fundamental reason is the sentiment, right? Again, sentiment, the way StoryTrading defines it, is the qualitative portion of fundamentals, right? So when we're talking about, for example, why is the NASDAQ going down? Why is Apple going down? What are the fundamental reasons? Well, we know it's increased interest rates. We know it's multiple compression because of increased interest rates. Now we're talking about profit margin compression as inflation stays high, as we enter stagflation, which I believe is rapidly happening. And then you also have possibly decreased demand in a recession. These are all fundamental factors which warrant the indices going down. And every day the indices are reacting to new information. And that's why indices can go up or down as people speculate about the future. And those same factors which are impacting the macroeconomics for like a QQQ or an Apple will impact the macroeconomics for almost any other stock, whether it's Dario Health or Smith Micro or even Virtra, VTSI. Now, some are going to be more insulated than others, like I would hope a VTSI would, because it's not really consumer discretionary spend, but they can be impacted on profit margins due to inflation. If the situation gets really bad, you can see tax receipts get lower for states, and they maybe have less money for police training. So everything makes sense. And that's the purpose of StoryTrading, is to make sense out of markets and really bring that understanding to you guys, because the market is not chaotic. The market is not unexplainable. The market makes sense. There's a rational, valid reason why everyone takes the actions they do. And those actions, and by understanding those reasons, you're better equipped to make the right decisions for your trading and investment. So that's why we're doing all this. I hope we get to the day where we no longer have to look at the QQQ and the SPY every morning, that we no longer have to look at Apple, and we can just focus on our micro caps with the backdrop of a stable macroeconomic outlook. But that's not what we have now. So we have to look. The first thing we got to do is look at QQQ and Apple every day, as it is going to impact the value of our assets in other microcap stocks. So let's look at QQQ. I talked about how yesterday was not as bad as it seemed. Even though we're having a lot of fun while I was like rooting for a limit down. Hey, if it's going to be a bad day, might as well make it historical. But at the end of the day, it actually held this double support here at 310. Okay. So it wasn't as bad as it seemed, and perhaps left the door open for a bounce today. But now we're right back at testing at 310 critical level, and Apple is going to be key. I've been saying for a long time. Don't need to dive into today why. It's for both sentiment reasons and both for mechanical reasons, because it's included in all three indices and it's a 2.5 trillion market cap. But Apple's been holding this 50-week moving average, but this is not just a technical thing. This is a sentimental thing. This is the stalwart, the company that can't fail, right? If the macroeconomics gets to Apple, well, that's what company is it not going to hit? So this is a very, very important level, and we're right at the precipice today, right? So today we'll decide if we get a bear market rally, maybe for a half a day, 1 day, 2 days, whatever it is. Ultimately, I personally don't think the Apple support's going to hold. This 50-week, I believe, is going to break. And as I've been saying for a long time, I think QQQ is heading to the 276 level. I hope it doesn't go straight there because I still have too much exposure, too much long exposure, and I'm waiting for Pops to sell more covered calls, to perhaps reduce some exposure and maybe add more hedge. And the hedge I've been adding is PSQ, one time negative the NASDAQ. I don't do SQQQ or puts because it's just too much chop. And if you don't time it perfectly, you could be totally right on your thesis and lose money on SQQQ or puts. Very, very hard. If you're a very skilled trader, you could do awesome doing those leverage products. I'm just going PSQ. But anyway, we're sitting here this morning. I believe there was some new economic data that came out this morning, and I don't know if that's why we're back retesting 310, because this morning we're at 314. Looking at this sharp drop, probably something did come out that's worrying people of a slowdown. Man, I wish I had time to really get into stagflation and why I believe this is happening, but don't have time to do that right now. So let's get into some individual stocks that came out with earnings. ENB, this is a natural gas midstream company. You do see some green here, and that green right now is in natural gas and oil and a little bit in agriculture here in these four stocks I'm showing you. And that really has something to do with the stagflation, right? Because even though the economy is starting to go down, I believe, even though these assets are coming down, you're not seeing demand destruction in the price of oil and gas and agriculture yet. And that's because this is happening because of an exogenous reason outside of our economy, which is a supply chain issue, right? It has a lot to do with the war, which is why you're not going to see demand destruction and you're not going to see the self-correcting. And that's why you can have elevated, you're going to see people's money being diverted, their income, their savings go more and more to oil, gas, and food, and less to discretionary products. And that's the danger of this regime we're entering with stagflation. Now, if you're in the right stocks, it's hard, man. I don't have a lot of exposure anymore to these. When the war came out, I had exposure. I went into those new FANG stocks, right? Fuels, agriculture, and it's tough. Commodities are tough to trade. It's not, I don't want to get into the reasoning of why I don't love them, but Warren Buffett loves it. So maybe you know something. So Occidental Petroleum, he bought millions of more shares the other day, and you can see it's been going up. He's in Chevron. Again, the natural gas, I have a little bit of KMI left, and that's all I got. That's my whole exposure in the energy sector. So Square had earnings yesterday. It looks like, 4.5%, but it missed on the top and bottom line. And if you look at the 5-day chart, really nothing too impressive. I'm not very interested in Square. I think Square will trade with the NASDAQ in lockstep. So if the NASDAQ goes to 276, bye-bye Square. All right. MP Materials is rare earth minerals. Rare earth materials. They seem to have a beat and yesterday with a price target increase, at least from one broker. So that's part of like the new FANG stocks. So possibly something you want to look into. So now we move on to these microcap stocks. Well, let me talk about Twitter before we get to the microcaps. Twitter, thankfully, is pulling back again for me because I'm selling weekly calls on this. So hopefully my $51 calls are going to expire worthless today, or I'll probably buy them back for a penny at like 358, and I'll sell next week's covered calls. So that's what I'm trying to do. I'm trying to identify pops and sell covered calls on any pops because I want to hold on to my positions of stocks that companies I like, which include Dario Health and Kodak. I still have VTSI, although I don't like what's going on there lately. Still got some SMSI. I don't love what's going on there lately, but this is how I'm holding on to stocks and generating some income by selling covered calls, and on pops also adding a little bit of that PSQ hedge. Kodak has earnings on Tuesday. Dario has earnings next Thursday. We also have ACTG, not on my list up here, but they just announced this morning the earnings are next week. That's a stock by Matt Kolb in the community. Very great presentation he gave. You can see it on YouTube. So maybe we'll re-engage. Matt has been out for a while for personal reasons, but is back in our community, collaborating the last couple of days. So we may have management of ACTG come and speak to us. Also, earnings for PTE, another Matt Kolb stock, is going to be happening the following Monday after that. So that's coming out as well. I do want to point out SEAC, which is starting to get a little scary because you can't ignore what the market's telling you. And the market is telling us as the NASDAQ goes down and as the market goes down, they're saying, I don't know about these deals. I don't know if this deal is going to go through with Triller. Maybe it's going to get reworked somehow in a way that's not as favorable to SEAC with that $2 optional buyout. So 91 cents, pretty bad, pretty low. Definitely concerned about this. And I knew this was a risk as the market started getting worse. That's why I had been shaving off on pops into the 130s. So I was able to do that a couple times over the last several months, but I still have a large position. So it's not happy seeing this down here. And you just got to acknowledge it. The market's talking to you and the market's telling you there's a risk this deal doesn't go through as planned. Now, I talked to the company, as you know, the other week, and everything seemed on track. But oftentimes the market, the collective wisdom of the market is smarter than the principals at the company. So that's something to be aware of and perhaps be a little bit worried about. But I don't think I'm going to do anything. I already took some off the table in the 130s. And, it's a tough market. It is what it is. Hopefully it works out. If it works out, I make over double my money from these levels. All right. Let me see if there's any news that came out here this morning. And I don't see anything pressing. But if there's anything I missed here, because 9:14, I got a couple other minutes. I think, we talked about why the macro economy matters for the microcaps. What I didn't talk about is this concept that I like of keep it simple, stupid. Or you can think of it as, I think it's Axom's razor or Axon. I forgot how to spell it, but right, there's a you know what I'm talking about, Axom's razors. I'm like, all right. Anyway, the idea is to reduce variables and keep things very simple, and that's what I do when I analyze stocks over a longer term. I almost purposely don't get into the weeds of any particular, let's say, even pillar. Right. So it's story trading. That's why we have the 4 pillars, to look at things holistically, to look at the big picture and take a very simplified view of things. In my experience, that's always turned out to be more accurate than any other way of doing it. You can go on CNBC, on Bloomberg, you can get all these experts in particular areas, and they're just too deep in the weeds. They're too smart for themselves, and they can't see the big picture. And for me, keep it simple, stupid is what gives me so much conviction. This is how I was able to time the tops of every major crash. The dot-com crash, 2008 crash, COVID crash. I didn't need to be an expert in any one particular area. I just had to have common sense, right? And it's just common sense that when people are spending more and more on food and energy, they're going to have less and less money for discretionary, and that'll trigger a recession, right? And the whole question here is, can it self-correct with demand destruction? You don't really get demand destruction with food. You can't really bring up the supply of food quickly. And gas, you can maybe increase the supply of, so it's a little bit better situation possibly than food. But that's, you have the geopolitical issues with oil. And for me, it's that simple. I don't need to be an expert in interest rates. I don't need to be an expert in anything. I don't need to go on TV and be someone who's very highly well regarded. I need to look at each bucket, the four pillars, superficially to understand where this is going in the long term. And I'm very convicted right now that we're going to 276 on the NASDAQ. And in many ways, I think that's a best case scenario. I think that's a bull market channel. And if we do get a recession or a deep recession, it can go lower. But you got to monitor the news. Things change, right? We'll see. You never know. Maybe there's going to be peace all of a sudden in Russia and everything will change on its head. We'll have to monitor the situation. But for now, I am collecting like baseball cards, PSQ, when I'm reducing things I think I have too much risk on, when things are popping, when the theses are no longer playing out. I take that off the table. I add a little bit more PSQ, and I'm safe with that. I don't have to worry too much being short with PSQ because it's one of the safest ways to play this. There's no leverage. You're not going to have like unlimited losses on that because it's an ETF. You can only lose what you put in. You don't have to time it like with options. Right. So if I'm wrong, I'm wrong. But this way, if NASDAQ goes to 276, I have a little bit of pile of cash. It's increased its value over the last few months as it works its way down to 276. And then I can put that money to work. Anyway, guys, that's the story. That's what we try to do here is bring understanding to markets. And so you guys can understand the story behind the trade and make better trade and investment decisions. I hope I helped a little bit in doing that for you here today. Have a great day, everyone.